Bring in right now Christian and Todd to kind of talk about this because, you know, Christian Dorsey, I mean, overall, the markets, we've had actually a decent year. If you look at the Dow, we've been up almost 9% for the year. The markets have been looking for some certainty. This deal on taxes would give them that. Do you view that as a market positive?
Well, it could be a positive for the market. That's a reasonable position to take, but that doesn't mean it's the right position for the American Congress and the president to take. You know, Cheryl, if you look historically, the markets performed very well under President Clinton, despite the fact that taxes were raised, particularly as a contrast to President Reagan when they were lowered, and they performed better under Obama than they did under Bush. The reason the market will continue to grow and people will prosper is if the economy's on sound, solid footing. And that's not going to be achieved simply by extending the tax cuts on high-income earners. So, you know, the markets may see a short-term boost because I'm sure investors will love the fact that capital gains and dividends will enjoy their lower tax rates, but that really isn't the point of economic policy to make the markets happy today.
Well, but I mean, Todd Schoenberger, do you agree with Christian? Do you think that basically that anything that's said on taxes under President Clinton, it was better off, we were better off then from a market's perspective?
That was a different time, though, Cheryl. I mean, there's a couple of things. The markets have done exceptionally well this year, but it's really been manufactured by the Fed, and we didn't have that type of involvement with previous presidents. Look, when you have to talk about the tax compromise, any compromise that occurs, as long as the tax cuts are extended, is going to be a tremendous boost to the markets. And it's not just for the next month or 3 months. It really will go through into 2011. And for a couple of reasons. One, you're really going to have people that are not going to be forced to sell right now, for example, for tax planning by the end of the year if the cuts are extended. And number two, it would eliminate one of those challenges that is against business that Wall Street continues to see from this administration. So it's one less thing that we need to worry about, but we still have other matters that we need to talk about. But that's a topic probably for another time.
Christian, we're going to have a tax expert in the next part of the show, but he makes a great point here that many businesses, whether it's large businesses or small businesses, aren't able to hire, aren't able to invest because they don't know what their tax structure is going to be next year. Even if we get what we believe we're going to get, which is at least a 2-year extension for all taxpayers, Christian, wouldn't that be better for the economy, for the markets?
Well, I think it's a false argument. The reason that businesses are uncertain about the future really doesn't have a whole lot to do with tax rates. It has to do with unease about where the economy is and what are the sources of demand that we're going to see in 2011. You know, remember, you know, regardless of what the specifics are of tax rates, you really only get into taxation as a negative incentive when it comes to profits that you may be able to make. And when you're looking at a business climate where they don't even have a recognizable source of where profits are going to come from because of suppressed demand, this tax issue is really one around the margins, and it's not the critical issue. And if we're talking about what to do with limited resources, I think putting it into proven job creation strategies is much better than these tax rates on high-income earners.
But we don't want Todd Schoenberger, we're not creating jobs. 9.8% unemployment. Ben Bernanke is saying 4 to 5 years we're looking at here for unemployment. So it's not happening. So maybe at least extending the tax cuts would give us something, would give the markets something.
Yeah, there's a couple of things. I mean, clearly, if you're going to extend something, the tax cuts, clearly it's going to help the markets and the economy. We know that because the inverse effect is that you let these things expire and then immediately, obviously, the markets would sell off. The economy would probably roll back into double-digit or back into a recession, double-digit recession territory. But here's the thing, Cheryl, and I think this is where the Democrats corner themselves. They talk about how the tax cuts because like Christian said, there's no real solid evidence out there that it's going to help the economy. But right now in 2010, those Bush tax cuts are occurring right now. So you have to think that there's probably something else that's wrong. And it's probably in the White House right now. If you really think about the policies that have been implemented and you start thinking about that anti-business rhetoric that we've been hearing about over the last 18 months. So there's got to be something else that is occurring that's prohibiting this economy from really growing the way it should be.
Let me bring in Jim Awad.
Yeah, I'd like to ask both of you. I think most of us would would agree that there is going to be extension, that they have no choice but to do this. Bernanke gave them the cover on his 60-minute interview. But what about the budget deficit? The wrap on this is that by extending it to the wealthy, you're materially increasing the long-term budget deficit. How long can we get away with these deficits before we have an accident in the bond market and the dollar goes down too much and interest rates go up too much? With interest rates going up too much would hurt the economy dramatically. Don't we have to have a credible budget deficit reduction plan now, soon?
And Christian, we had one last week, excuse me. Didn't go anywhere, but we had one.
You talking about Bull Simpson?
Yes. Yeah, which you didn't like,
well,
I know, but I mean, we had something.
Well, you know, there are lots of deficit reduction plans out there. My institute has published one that I think is, you know, with all objectivity put before you, I think is very credible and very sound. But, you know, I think the question is right. You know, we do have to get serious at some point about the deficit. And, you know, losing $70 billion a year, $700 billion over the course of a decade on inefficient tax cuts for high-income earners is really not the way you get serious about the deficit. And there are going to have to be other trade-offs made in the future. And I think when we look at the tax cut decisions we make now versus other needs that our society and economy has, they will pale in comparison.
Todd, 20 seconds. What do you think?
The liberals like to talk about that $700 billion price tag, and that is over 10 years, if the tax cuts are permanent, if you were going to keep them there permanently. Look, they should be there permanently because the money that will be generated by the economy, you'll see the tax rolls increase. We saw that during the Reagan administration. That's what we really need to grow this economy.
Let me give last word to Sandra Smith. She's been very patient with me this morning.
You know, I think you just have to point out the fact that a lot of people that argue for the fact that the taxes should be raised on the rich, as they look back historically and say it's been done before and the markets have thrived afterward. I think, Christian, you have to point out the fact that we're dealing with a completely different circumstance, the deepest recession since the Great Depression. I mean, these were unprecedented times, and to raise taxes now, this is a really tough argument to make.
All right. Christian, Dorsey from the Economic Policy Institute, Todd Schoenberger, Land Cult Trading. Thanks to both of you. Great to talk to you on this issue.